Hey guys, welcome back to the channel. Today is Tuesday, March 5th. So it's been a while since I posted. I didn't post up a video on Monday. I was still traveling back from Texas and just super exhausted and was hanging out with my friends. So decided to take some time to do that. Since we've been away for so long, I'd like to take a look at, how the overall market is doing technically, and then we'll dive into Bitcoin, which has been, again, the main driver and the main show for the last couple of weeks. It actually hit an all-time high today, and we'll check out what that means. So taking a look at the markets right now, looks like equities markets are taking a little bit of a breather here. With the SPY and the S&P 500, we're down 1.24% today. I think it's expected. The market, hit this resistance line here at around 500, and it's taking a little bit of a 515 here. It's taking a little bit of a breather, and I think that's perfectly normal. I think in most raging bull markets, I think that a 1 to 2% drawdown is normal. I think when we get to 5-10% down days or weeks, I think that we get a little bit more concerned. There's also a lot of macroeconomic data coming out this week, and then also Powell's also having a speech, so that could affect the market right now and just how it's doing. Moving over to QQQ or the NASDAQ, we also see that it's down a little bit more, about 2.17%. NASDAQ, growth in tech companies, and so it's a little bit higher beta or a lot more volatile, a little bit than the S&P. So how this is doing right now is we've hit some resistance up here at about 140, about 4444, and then we're downtrending today. Again, this is very similar and very normal for markets to correct, and I'm not too worried. I did change the display a little bit on the Demark indicators, specifically for sequential and combo, just to make things a little bit more clear on these charts for you guys. So what I had is I actually made the 9s and the 13s much bigger, and the 9s from the combo are actually much larger, while the 9s from sequential are a little bit smaller. That's just because sequential is the first Demark indicator, and then that's the mostly widely used indicator for Demark. He actually came up with another indicator called combo, and combo is actually a more stringent form of sequential, and so the 13s and 9s coming out of combo I've just made larger. So again, making sure that the larger the indicator, the 9 or the 13, the more powerful the signal is. So we saw we had some 13s and we blew past them. Pretty typical for a bull market, and that's why it's difficult to trade Demark on just specifically pure Demark. You have to kind of understand what kind of market regime we're in, which is either a reflationary or Goldilocks regime. And you got to understand what's happening, outside of Demark, and that's the same for any technical analysis. You really want to use it as a supplementary tool. You don't want to use technical indicators as your main tool and the only thing you trade off of. Looking at the VIX, we are up about 3% from the VIX. Still within this trading range, so I don't see it, trading up any higher than this, and that's normal. Moving over to the dollar, we are flat with the dollar. I think that makes it a little bit harder to see where the markets are going. We did see that it was starting to downtrend, but it went up a little bit. If the dollar continues to go down, I think that'll be good for risk assets, but no real clear indication of the direction of the dollar. So if it goes up, it could mean that there's some de-risking. I think that's normal. I think when we combine the dollar with the NASDAQ and the SPY, we could, we're definitely overstretched. We're in the upper bounds of the Bollinger Bands. Just means that the markets are stretched, and this pullback and getting into the middle of the Bollinger Band range is also a good thing for the market to do. Moving over to the 2-year and the 10-year note, they are about flat as well too. That means, so we saw that the value of the bonds from both the 10-year and the 2-year and the 10-year have gone up, which means that the rates have gone down, which is good. Higher rates just add more volatility for people renting or people using their credit cards, or people who are in the market for houses. So we want to see this continue to trend up, and hopefully we'll see that over the next couple of weeks. Moving over to gold actually had a big move. Gold today is up 1.46%. and we saw this big break above, so sitting at right now at 2,126. We saw this fake out break back here in December here, and so this break is going to be pretty critical. A lot of the folks that I'm following right now think that, hopefully this will be a follow through for golds. I actually put in a position on my gold futures contracts for 2 contracts right here, hoping to break out of this. We'll see. I think this is a good risk to reward ratio. So I put my stop right under this at around, I believe, 1900. But I think right now, since Bitcoin and everything is rallying, it should be good for gold as well too. I think a lot of the ETF flows coming out of gold and into Bitcoin have kind of stopped, and hopefully that'll make gold a little bit more continued on the upside from here. Moving over to oil. The oil is down 1.25%. We actually hit some 13s here, which indicates that it could be in a potential for a pullback. 13s are pretty some strong signals. I think the overall trend right now is still up. It's hugging this, I think this is the moving average line right here. So if it's still above that, I think that's still bullish for crude oil, and I think that's going to be okay. I think we're hitting a spot where it's considered macro crypto summer to spring into summer transition, so that's expected that oil kind of goes up, and that's good for the markets. So moving over to Bitcoin actually hit an all-time high today at $69,000. It's actually pulled back, and we'll take a look at it technically. Before we do that, let's head over to Degen Tools Bitcoin ETF flows. They have a good Bitcoin ETF tracker right now, which is really good, and we'll see what the ETF inflows and outflows have been doing. So for yesterday, March 4th, these are delayed a little bit, so we don't find out until the end of the day what the ETF inflows and outflows look like for the different ones. But you see here the total for yesterday was about another $560 million, which is again absolutely crazy. We did see some outflows here on March 1st of about 140 million, which is not too crazy. Just taking a look at these, you have your ARK, I think this is the BlackRock one. The other major one I've been following is the Fidelity one, which is the FBTC. I think right now, even from yesterday's inflow, that has been the main driver of the move here. Fidelity's Bitcoin ETF has sucked in about another $400 million of total revenue or total inflows, which is kind of crazy even compared to some of the other ones. And then just the overall picture, there's about almost $8 billion of inflows starting February 15th. So it's been less than a month and we've already seen $8 billion of inflows, which is crazy. I think the supply of Bitcoin is very limited right now, and that's probably why we're seeing the price appreciation. I personally do think that things and the price is going to continue to appreciate, but let's dive in over to technicals to see what the Bitcoin looks like right now. Okay, so looking at Bitcoin at the time of recording, we are at $62,000 right now. It's a huge gap from the beginning of the day, which we saw almost hit $70,000 at around $69,000. Very volatile today. We have a huge range from 69,000 all the way down to, it just wicked down all the way down to, it looked like below 60,000 from here. From the market indicators, we currently don't have any major ones right now. We do have this one for a down countdown indicating that the direction could be down. I think maybe in the short term, consolidating. And let's continue to watch this $58,000 level and see how things do. I personally don't think, and I think it's already bounced back at around $62,000. So I don't think we're going to break this one. As you guys just saw from here, we just saw a 9 from a combo just hit. So this actually hit this morning. It went back and forth, this signal. So I can see why there's such volatility today, especially with this 9. And I think most of the volatility is probably out of the way. So if you were, and you haven't been involved with Bitcoin and you're looking to add to it, this wick down is I think a good area to maybe slowly add into there. I wouldn't put my whole position in there, but slowly start adding some exposure into Bitcoin, and I think that will be good. Looking at the hourly, we do have D-wave projections of 1 and some camouflage here indicating the uptrend could be up. I would be worried again if we broke some of these 52,000, 55,000 levels, but things look to still be doing good. And I think it's just, hitting these all-time highs, you're going to see some of these crazy wicks down. You saw that again when we hit about 60-something thousand dollars right here, and it wicked down pretty hard. And so I think this is just normal. this part of the bull cycle, I think it's holding on, and that's exactly why they call it a bull cycle, is just make sure that you stay on for the ride. And then right now, you know, we're right here on the daily chart, just a little bit overbought, but again, this momentum can kind of continue, and we'll see how this momentum plays out from an RSI perspective. Looking over at the weekly, we just have some upper targets here. I think we've had those for a while at $75,000, $72,000, and things are looking good. You've seen Bitcoin basically hit this parabolic uprise right here, and things are going to continue to do that. We've just barely touched the overbought region, and hopefully we'll kind of see this meander and move along at this. But I think still the momentum is still there. The price appreciation is still coming in, and the inflows from the Bitcoin ETFs are going to keep Bitcoin afloat, I think, for a decent amount of time. So let's see. And finally, let's just dive over into some of the on-chain metrics we've looked at in the past before. This is actually from CoinGlass, and I'll put the link in there for you guys. I did have a subscription to Glassnode, and although it was good, it was quite expensive. CoinGlass is actually free from what I can see, and I just started using it today, but it does have some of the indicators that we're looking at of the Pi cycle top indicator, which is good. Right now, as you can see from the Pi top indicator, we're right around the middle of the range. This upper target right here, I think, is a little bit below $1,000, and we're right in the range. We haven't hit that yet. As you can see from previous markets, we've blasted past this range, and it continued to be at this range, the top end of that range, for a while. So right now, again, I think we still got way more room to go here from some of the on-chain metrics. Things are looking like they just got started for Bitcoin. Another tool, another chart that I've seen a lot of traders take a look at. I haven't started looking to a lot myself, since I use a lot of the market indicators for technical analysis, but a lot of folks look at the liquidation heat maps. Essentially, this gives you a scale where the purple and blue have not a lot of liquidation activity, and then when you get to this yellow section right here, there's a lot of liquidation activities. This is actually on an hourly, so within the last 24 hours chart. I think you can change it up here. I've been playing around with it. It hasn't been working that great, and even though I've been refreshing, probably a lot of folks are taking a look at this right now, and that's probably one of the downsides of using coin chart versus, like, let's say a paid service like Glassnode, is maybe the uptime and the usability isn't as great. But for folks who want to get into some of the on-chain metrics and take a look at some of this data for free and to kind of start, I think it's still a good place to start. As you can see right here, we had a lot of yellow liquidation zones right here at the $69,000 level. That actually was a really good indicator right here. As the price broke through 69,000 here, we basically saw a liquidation cascade. We had some liquidation events that happened right here too, and we saw this big wick down, and now things are starting to stabilize. I think for, again, folks who haven't been allocated fully, or somebody looking for a tactical trade, I think this is good, since a lot of the leverage has been taken out here with this liquidation and this huge wick down. I think that's going to be a good time for a tactical trade. And then maybe the last thing I want to take a look at with you guys is this RV score, and we took a look at this indicator before. Essentially, it just helps you pick out some of the cycle tops. As this is peaking, we usually saw a peak in the Bitcoin pricing here. Right now, the indicator kind of dropped off significantly, and right now we're probably right here in the middle. We haven't even hit some of the, usually 6. I think we've been past 6 is where we should be a little bit more cautious. Right now, we're a little bit above 2 for this indicator, and I think that's good. I think, again, this kind of coincides with everything that we're looking at from a technical perspective. Some of the on-chain metrics are showing us that we do have a lot more room to ride. For me, again, maybe after 6, I'll be a little bit more cautious and a little bit worried about how Bitcoin and crypto is doing. Even more cautious when we hit 8, and it seems like we've peaked at some of these cycles around 10 or so, and even in 2021 we crossed the 6. Again, there's so many other different types of indicators and different tools on here. I'll try to explore some of them with you guys over the next couple of days and months, as we kind of follow this Bitcoin bull market and crypto bull market in general over the long term. I still think we do have a lot of room to go, and let's see how everything works out these next couple of days. Thanks for checking out and hanging out with me and learning a little bit, and I'll catch you guys next time.